Ọmọ kò sí mọ́ sílẹ̀.
All right, so good evening, everyone. Each and everyone that are here. Can you guys hear me? But my mic is not on.
Yeah, we can hear you. Good evening.
Good evening.
Awesome. How have trading been for you guys? How have your trading been for this week?
Challenging. Very, very.
Like what did you call it? What?
Let's do it. Who's
Even
especially good?
Hmm?
Who's especially good? Good go whine you, but no panic.
even una mentor, Abby and Jeffrey, they collect them. Now, how many stop loss they don't collect for this week? The thing is, when it comes to June, July, August, and sometimes September, trades tends to take stop loss a lot because there's either recession in one country that will affect almost all peer. Now, DXY, which is the most traded, the one that have is the most traded currency that most people trade with, GBP USD, Euro USD. You guys understand what I'm saying now? That's what is affecting of the currency right now. USD they're currently under recession. They have been dropping since when? Since June. Can you see? Since June, July, August. They'll be dropping. Now, if they are dropping, you should be expecting abnormality in the markets. Now, this one change character. This is a 4-hour time frame. You change character to buy, you change character to sell. So in rare cases, he's not respecting OB. See, OB that has not even been respected.
And we are talking yesterday. He change character anyhow.
That's the thing. You'll be seeing a lot of change of character. If you set OB, you set other block, you set breaker block, there's now you go chop stop loss. I don't want to know. That's why today I'd rather just stay out of the market. Better just start of the market. See OB, the price not come and tap into 1, 2, 3. Okay, this is the 1 hour I first tap on. 3 OB's price reduces. But still on still does not mean some people are not going to make money. You'll make money, but like I used to preach to you guys, no matter any trade you see in the market, try to use good risk management. It's risk management that can save you in this market. When someone drop, you have $50 because your mentor or someone that you know that can trade well, could be me, could be Abby, could be Jeffrey, could be Dax, could be anybody. You see that this person can trade well, you have $50, you quickly fund your account, you are in Signal Group. Now you post Signal, buy this one, maybe buy gold or sell gold. You now flip with $50. Now, so are you not supposed to like the $50? The maximum you should be using that $50, the maximum risk is $10. But you see some people, and even the funniest part is, if $50 is the only money you have in your savings, you save, okay, you save from 1 month to 1 month, and the only money you have $50, do not use it to trade. That is not how you trade. You don't save and say, okay, you save for trading and you don't have any money. You now use the money and trade. If that money blow, you go. Since like on Friday now, I've been seeing some people coming to my DM. God. I've seen some people coming to my DM telling me, boss, this was that it was before. Tell you to tell me I dey enjoy am like this. As I dey chop loss, you still say I dey enjoy am. So with everything that's happening, I'm still applying my own risk management. It's not like I'm not taking loss, fine, I'm taking loss. But that does not mean with everything going on that I'm noticing that the way trade is actually going, I'm not saying as I'm taking one loss, I want to make it back fast. I should put in more money inside. No, that's not how you trade. You're basically you're gambling. You're not following trading plan. And I believe I sent each and every one of you a good trading plan. I'm coming. I believe I sent everyone a good trading plan that they should follow. Most people don't even follow trading plan. They just look at a trading plan and they just come out eyes for the trading plan. Everybody's waiting for signal. What I'm just glad about is I can see most people in the group are now doing well for themselves. They are not actually learning how to trade. They're not learning how to trade by themselves. They are dropping signal and they're actually doing good. Even though they are taking losses, you can't actually say you want to start taking signal and dropping signal by yourself and you should be doing good. You still see losses before you start getting better. So my point of this whole talk that I'm talking is, please, anytime you want to trade, number one, don't trade with, if all your savings is what you want to put that, okay, you want to use and trade, do not trade with it. Do not find extra source of income. Always use out of your savings. If you want to trade, use just 10% of your savings to trade. Don't just enter market with all your money and say, okay, you want to make money, you want to buy this, or that's not how you trade. Now, some people, they'll say, please, boss, can you help me to flip this account? I want to quickly use the money. That's not how you think say flipping daily, they easy like that. Now you have $100. You say you want to take it to $1,000, $2,000, and that's the only $100 you have. Say you want to quickly time, maybe for something for school or something. But that's not how it works. You need to have, I always spread this thing before you even flip. Make sure that money, you've forgotten that money, you've given market the money before you even flip. It's very, very important. Now I asked for flipping class now. I can see a lot of people have turned up. You want to start flipping. If you want to flip, I'm saying this thing again. This is just the number one rule. Do not flip with money you are not okay losing. If you just have $20, do not flip without $20. I'm begging you now. So you know, say, Ether mentorship is this. That's not why we are here. That is not why we are here. Fine, I'm here to teach you how to flip. I'm here to teach you how to flip. I'm not here to teach you how to burn your money.
You want
Some-
to give this mentorship another name now?
All this I'm telling you, I swear to God, some mentors no go tell you. They go just tell you, okay, come enter mentorship. They go say, do this or do that, and that's all. Please, if you've tried this now to tell you now, this flipping method now to teach you now, make sure you first try it on demo. This is the second rule. Make sure you try it on demo for 1 week. If you do not get it on demo for 1 week, fine, you can ask me question. If you keep going and you don't get it on demo, do not continue trading. Don't even put your money. Don't. Because this flipping is something crazy. If you don't have money, you go regret. Oh. I'm begging you now. Do not flip. Number one, do not flip with money you are not okay losing. Dollar is already 1.6. 1.6 times 20 is what?
Maybe 38,000.
That's 30 something thousand. Imagine losing 30 something thousand in this Tinubu regime. Imagine losing 30 something thousand. Where boy don't even protest. Say if all those protests even here say they lose 30 something thousand, they don't go come kill you for house. So please try it. That's just $20. Because I know some people go still flip with $50, $100. That's just 20.
32,000.
Exactly, that's 32,000. So guys, please, as much as I want everyone here to keep winning, try to follow rules. It's these rules that is going to help you in trading. If you ignore this rule, you are going to keep blowing money. And last, you go leave Forex. I don't feel like. And in the end, you are going to regret that you've been joined. So I don't want you to regret. I don't want you to lose money. Even though you want to lose money, the point of this flipping or the point of trading is even though you lose money, at the end of the day, you've made that money back that you lost and you're still even in small profits. Even though you're not going to be break even, you're going to be in small profit. That's the whole point. You cannot keep making profit. You still have loss. But at the end of the day, make sure your profit cover your loss. Please, do we all understand now?
Yes.
I got to take beg now. So now let's start with the fundamentals of how to flip. What you should consider before you flip. Number one, you go to my FX book calculator. This is my FX book calculator. You type on the first one. So this is what you use and calculate your your lot size. Because I know some people don't have $20. They open 0.05, 0.0. That's not you flip. There are rules you need to follow before you start flipping. Please try to mute. You guys should try to. Please mute your mic. So now you change this currency pair, you change it to gold. You can use it for other currency as well, but this flipping, I just want to use it for this flipping class. So this currency pair, we'll change it to gold. XAU USD. XAG. This is XAU USD. Then USD. Now let's say, let me take this down. Let's say you are given this trade, this sell signal, and you want to flip with this sell signal. To calculate your lot size, your stop loss lot size, like I used to say, you remove the last 2 digits. So you're going to be left with 3.8. 3.8 means 38 pips on gold. 6.1 is 61 pips. Like that. Oh, 1.0 is 10 pips. So like that, let's just say is on this 3.4. This is 34 pip on gold. So you go here. Now, let's say you want to flip with $20. Let's just use $20 for an example. This account size, you put $20 here. Please, okay, I think someone is recording the class. If you are done recording the class, please just send it to the group for those that are not here. So this account size is where you put your amount, that's $20. Your risk ratio, you put 100% because you are risking all the $20. So you put 100%. Your stop loss pip, don't forget, like I said, is this 3.4. That's 34 pip. So you put 34 pip. Then our loss side, we used to start with 0.01. And this is what you'll be given first. You'll be given 0.001. So you need to remove 1 0 at the back. Then you are left with 0.01. Then you press this calculate. Then that's all. This is the lot size you will use. Now, because you might not have the leverage of 1 ratio, and make sure your leverage is at least the minimum of 1:2000, because Exness might not give most people 1 ratio unlimited unless you've gotten up to 5 lots, unless you use 5 lots and you're profitable with 5 lots. So let's say you're using 1:2000. This is what you're going to use. This 0.06. Now you'll not be allowed to use this 0.06. And if you're allowed to use 0.06, fine. But if you're not allowed to use it, you open 0.015 position. Don't make it 6 position. 0.016 position is equals to 0.06. So you're going to make it 0.015 position because of spread. So soon as price comes into this, your entry points, this is where you open 0.015 position. Now, if we are calculating the total you'll be having in this trade, is this risk to reward ratio is 1:5. 1:5 means you are risking the whole $20 to make that's 20 times 5 is what? Is that like 100 or so?
That's $100.
So that means you are risking 20 to make $100. Do we all understand to where I explained it to? If anybody do not understand what I just explained, please signify.
Excuse me, sorry, would it be the whole $20 if you are not opening the 0.06 lot size? Because in this
Yeah,
case, you're opening just 5 positions.
Yeah, that 5 position, due to spread, it should have been 0.016 position for the 100% capital. But we are using 0.05 due to spread because we cannot enter immediately. You cannot be that perfect. Do you understand? So it's going to be 0.05. We're going to reduce our lot size.
Okay.
All right. So that's it if you want to enter at this point. So how will you know when to enter more position? This is where it gets interesting. Let's say you've entered for the sell. Now it's already selling. Price gives you this lower high, lower low. Now you have more money, or should I say more leverage to enter more position. You should only enter more position at this point. If you are flipping, make sure you're on the 5-minute time frame. You should enter more position if price action pull back to this order block, or at least your fair value gap. If price action pull back on the 5-minute time frame, pull back to this fair value gap or your order block, you will add 0.01, 2 or maximum 3 position. Do not let it exceed 3 position. Please, on mic on. Please mute your mic if your mic is on. So once it has entered this, your fair value gap or your order block, do not let it exceed 0.013 position. Now, let's say you've entered 0.013 position here. It starts selling. I want you to understand that for every position you are entering, you are going to be having more than the $100 you'll be having because you're already entering more position. So at least if you have the chance of entering a position of like 2 times before it gets to your entry, at least you'll be coming out with nothing less than $200. It's just that simple. If price action retraces back to another OB or FVG, this is where you enter more position. This is where you enter more position. So now, in a case whereby price, take all of this down. In a case whereby price did not retrace to an FVG or an OB, do not enter more position. This $100 is enough. 20 to make $100 is enough. do not enter more position. Why? Because if you enter more position at this area, don't forget we have an unmitigated price has not mitigated this fair value gap. Neither has it mitigated this order block. Now you've entered here. Price starts selling. High chance if price start retracing back up to test this OB. Number one, it has given you a change of character. It can just start buying and go back to your entry, taking out all your money. You need to understand this route very, very well. It's very, very important. Because, like I said, if you enter here, it has now broken structure to the downside. Now it has changed character, start going up. Number one, first thing is it can just keep going up, going to your entry and take out all your capital and everything you've entered. The second one is if it eventually tap on this place and start selling, the thing is already going to be scattered because you don't arrange it accordingly. Basically, what you are doing is you are maximizing profits in that other one I explained. Or this place is already scattered. You're not arranging it accordingly. So like I said, you need to make sure price tap on an FVG first before you sell. Let me take all of this down. Hold on. Before you want to enter for the sell, I'm using this sell for example. The same thing applies if price also bullish. So you need to make sure price action come into and tap at least the FVG. Even though it's not going to tap at the OB, make sure you tap on the FVG before you enter 0.012 position, maximum 3 position. Because I know some people are greedy. Maximum 3 position. Do not let it exceed the 3 position. Because if you enter another like 5 position or 4 position and start going up, before you even reach your entry, it will have taken you out. So you understand, even though in flipping, there's still need for you to understand how to use risk management. All these things are important. Now, if you don't want that, the first one is like what I just explained now is just you being aggressive. You enter with every position you have. Now, if you don't want this type, the other one is just soon as price gets to this point, just make sure you open 0.05 because it's 0.06 here. I mean 0.01, 5 position. Just open it and let it run. And that's it. Don't enter any position. Those are the only two choices you have. Either this one is very, very aggressive. Because before you can do this one, you have to learn this one very, very well and make sure you're really good at it. Learning your market structure very well and learning how to use your order block and fair value gap. With this one, you have more profits. With this initials, you should be having $100. That's $20 to make $100. But with this, you'll be having more. But they both have their pros and cons. This one is easy to do. The pros of this one is once you've entered the account, once you've already entered all your lot size, you're just leaving it to go down and you're going to leave with your $100. There's not like it's breaking, there's not like the price once it has broken up and change of character and all that, like what I just explained here, there's not like it's here. Now the con of this one is the same $100 you're going to make here is the same $100 you're going to get. That's for this one. Now for this one, you are going, number one, the pros is that you are going to be making more. Why the con is that if you do a little mistake, it's going to wipe out all the money. So you need to know how to balance in which one you are going to choose. Either you just set this one, at least $20 to $100 is not small. It's not something that is small. It's a lot of money. So that's just how I flip. Either I do this or I do this. It depends. So whichever one you learn and you practice, which one works for you. And again, flipping is not for everybody. If you've done it with your demo and you see it's not even working on your demo, do not continue. Just leave it and continue trading conservatively. Even though you are trading conservatively, there's a way you can trade it and you still be in profit. Now, if you have a $100 account, they say the right risk to use on every account is like 1% or like 2%. Now, if you want to grow aggressive on a $100 account, you can use at least you can risk like $5 or $10. That's you going aggressive on it. It's not you flipping. You're just going aggressive on it and you'll be making good money with it. That's like $100. That's like 10 to make like what? 10 to make $50. So in this trading, there are different types, there are different ways to make money. It's not compulsory you stick to this aggressive flipping that me I used to do. This one will take time. But it's not like it's not possible. It's possible, but it will take time and you will blow a lot of money. Because after you've now gotten the hang of it on demo, you now have to go use your live account. Now, if you want to start your live account, do not use money that exceeds $20. Do not use 21. Don't use 25. Don't use money that past $20. It's just that simple. So with these rules and everything that I've given you, I know some people are still going to go against this rule. If you go against this rule and you blow money, don't come into my DM and be saying, Ethan, it's you that say it. It's not me that say anything. It's you that do it too. Because every single thing that is happening here is what I've tried and is actually working for me. If flipping is not for you, please do not continue. Because you are seeing people flipping from 20 to 200 to 150, it's not as easy as it looks. In a day, someone was saying recently that in a day, you can see Ethan flipping $100 like 5 times or 6 times. It's true. The person was not lying. You can see Ethan flipping $100 5 times or 6 times. That's like how many dollars? $600. But once I flip the menu, the last one is what is going to cover for my losses. Because if that's what I'm telling you guys, even in this flipping, you need to understand good risk management. It's not because you see someone flipping you to now say, okay, you want to try it. And everything I just explained, make sure before you do it on your live account, try it on demo for at least a week. It is very, very important. That's all I have for flipping. Any question?
Please, I have a question.
What's your question?
Concerning the entry,
Yeah,
what
the
if
entry.
let's have maybe some trend line liquidity above and
If you
want
have,
to clear it?
it's still the same thing if you are trading, if you are not flipping. If you are trading conservatively, if you see trend line liquidity above, will you enter or you not enter?
I will wait to
It's the
sometimes.
same thing. Once you are flipping, it's also the same way as if you are trading conservatively. Your entry should be the same thing. It's like you're following your trading plan as well. The only thing that is different from trading conservatively and trading and when you're flipping is when you're flipping, you don't wait for a change of character. Because in most cases, people wait for change of character. And I don't remember the last time you could have done a change of character.
So I would like you to enlighten me more about this entry point because sometimes even when my order block is correct, it will first take me out before continue selling or buying.
It happens. It happens. You cannot always be correct in the market. Even this other block, I saw this other block. Was it yesterday or today? Okay, this is it. This other block. Thank God I was not on my way to enter the market. This is another block here. Now, see price action on the 1 hour is bearish. 1 hour is bearish. 15 minutes is bearish. Now, people will want to enter after price has see this other block, break of structure. People want to enter here. Enter here like this and put their stop loss above here. Now, can I see what market did? Get bought impossibly to the upside. He bought impossible because market has just been doing anyhow. This does not be fully analysis. That's why I say you need to have a good risk management. Now, after it bought this, instead of it to come back and tap into this OB again, what happened again? What do you say? So happened again. It used one pip again. It not tap on the OB. It started selling again. Can you see what market has been doing? It filled up this fair value gap. What happened again? Just tap on the OB supply zone and start selling. It refused to tap on it. So that's what I'm saying. It's not all the time you be right in the market. It's not all the time. Do you understand?
Yes, sir.
So that's just, even, was it yesterday? I dropped a signal of yesterday. All analysis was correct. A plus setup. We even have a change of character. What still happened in the market? It still went up and take our stop loss before it started selling again. So that's just something about this trade. Okay, so I think it's the trade. We had the 5-minute change of character somewhere around. Yeah. This is a higher high, higher low. Higher high, higher low. This is a change of character. Now you see price action change characters to the downside. But don't mind you, all time frame are bearish. Now this is the last order block. There's no any order block here. But what? There's a trend line here. There's a trend line here, but there's no any order block here. Since there's just 1 point order block here. Now what can we see in the market? This was a A+ setup. What happened? Price went up and take out liquidity. And what happened? It started selling. And this was like our TP around here also. So that's just something in the market. Now let's say you have a $100 account. This first one, you risk like $5. And on Monday on, you risk like $5. What are you? You are still going to be left with $90. That's still good. You're left with $90. But now, you that you have $100, that you don't have good risk management. You have $100. This on Monday trade that took our stop loss. You enter a trade, you risk $20. You've lost $20. This one again, you say you want to make your money back. That market has fucked up. You want to make your money back. You enter, you've lost another $20. That's $40. Remains $60 in your account. Now let's say today, please mute your mic. Now, mind you, that's $20 because you don't have good risk management. Today, there is no drop signal again. By yourself, you go enter trade. You enter stop loss again, and that's $20. You are left with what? $60. You can't carry the anger, can't they come on DM or they come group. Now imagine if you have just risk the $5 explained. $5. That's you're still going to be left with a good amount. Because you want to make money, you have forgotten that trading is all about risk management and following your trading plan. That's all. That's just it. So guys, please, I can't keep preaching this thing enough. Have a good risk management. Yes, then won't have any other question before this meeting end, because it's going to be in the next 6 minutes.
I just have a suggestion concerning this flipping.
Yeah, what's the suggestion?
Don't think you can just do like a practical aspect for us. Maybe you should just do it together with us one day. If you find a plus.
Okay, with this one, market has been doing somehow.
No, I just said anytime you find an A+ setup, if you can just do like a practical for us.
Alright, no.
Anybody that wish to participate too.
Sure, I get what you're saying. Let's see
Hello, sir.
Yeah, I can hear you, right?
Okay, this is Shadrach, yeah? I know you remember.
Okay, yeah, I remember. So
I'm okay.
yeah.
Yes, so now I've been watching your chart here, and I noticed that sometimes your entries, sometimes the trade doesn't tap on the OB. There's a trade you post that you didn't get to the OB, but you took the trade on fair value gap.
Yeah.
So what was the conviction you had? Because I mean, if you have like OB and fair value gap, you might probably want to wait for the OB to be tapped, but then you took the trade on fair value gap.
I took the trade on fair value gap. Which trade was that?
You posted the chart. I just joined the group back yesterday.
And it was on fair value gap. I don't think I put any. All my entries are always on OB, unless it is a support and resistance. If there's a support and resistance, a fib, and this thing fair value gap, that is going to be on the fair value gap. It will be on the fair value gap. Like on this level here. On this level here, this is support and resistance here. But this is the OB. Okay, since on the 30 minutes. This is the OB here. The OB starts from here like this. But what happened? There's still one pip that is not going close to the OB. And I can see the support and resistance here, and even the Fibonacci is also going to be at this area. So it's in rare cases it's very, very rare you see me using fair value gap. It's very, very rare. It's very, very rare.
Okay. All right, thank you so much.
Yeah, you're welcome. So anyone else have another question? Because this meeting will end in the next 8 minutes. The only thing I can just keep preaching to
Yeah, I
you
have a
guys.
question.
Yeah, what's your question?
For the flipping thing, you didn't say anything about stop losses. I'm guessing there's no need for stop losses
There's
when
no
you're
there's no stop loss
flipping.
when you're flipping. When you're flipping, you are risking. That's why I said 100%. That's why I use 100%. You're using everything. If you're using stop loss, you're not using 100% of your capital. You're risking a particular
Yeah.
amount of. There's nothing like stop loss
Okay.
because once it tap on your
Okay.
entry, you are risking every single lot size that
Everything. Okay. Thank you.
yeah. So any other question? See traders supposed to come to OB again. See this is the OB it is. It is the OB on this 5 minute again. I thought I saw someone said they should buy around this area. Was he who was that self? Because in the group I saw someone
Is it
said they
Danny?
buy.
There's a small other block on the downside. We
You
buy
should
other
not be
block.
selling. You should not be buying. Why are you buying? Gold is bearish. Overall time frame of gold, it is bearish. Down to the 15 minutes, 1 hour, it is this buy that happened is what they call retracement. It's what they call correction. You should not be following a correction. This is what you should be looking for. Unless you just have money that you just, even though you want to buy on a downtrend, you make people understand that it is a low probability trade. You should not be buying in a downtrend. It is a low probability trade. Look at the sell as it's impulsive. How many candles make this whole sell? It's just few. But look at this buy. This is like hundreds of candles that make this thing. But look at this sell that just happened. 1, 2, 3. 1, 2, 3. The sell are always small. That is what you should be looking for. It is very,
But sir,
very.
I notice whenever there is much inefficiency in the market, either bearish or bullish, market
Yeah.
tends to always feel it.
Yeah, it tends to. That's the point of inefficiency. Inefficiency acts as magnets in the market. It attracts price to go. So I think they drop. It attracts price to go into the, like this one now. This inefficiency is swept up and tap on the OB. This inefficiency is swept up, it not tap on this OB. That was the mistake that this price did not even do. That we failed to enter this market. It swept every single thing, but still it not tap on the OB. Look at this one again. It swept all, okay, like to 80% or so. It failed to tap on this OB as well. So look at this one. It has filled all this imbalance. All this imbalance has been filled. That's what, and I think there's an imbalance. Okay, all these OB that are here. Okay, I think price has tapped into this one, but there's still like OB down here. Look at this fair value gap and price action has then. Yeah, look at all this area. There's no any candlestick that is around this area, so you might still want to keep selling to the downside because overall price is bearish. It's very, very bearish on gold. It's very, very bearish on gold. So this meeting will end very, very soon. You guys just please, what you should be learning is risk management now. Just go and learn risk management. That's what will help you in this trading. Go and learn risk management. Be disciplined on what. Yeah?
I said our market structure.
I believe by now everyone should understand how to use your market structure now.
Yes, sir.
I believe by now
I
everybody
beg
should
on the
Those
group somebody asked.
ones talking about market structure, those videos are just very recently.
Okay, so wait, do we have any newbie here that has known how to use their market structure? If you don't know how to use your market structure, just let me know.
Bro, I'm actually saying that because of